Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for October 11th, 2010. This is Patrick Ceresna. As always, we start off with the S&P 500 using that spider exchange traded fund symbol, SPY. More or less, we had now the S&P 500 advance on last Friday all the way up to the 117, 118 area up above. This overhead resistance marks the level where the flash crash rebound rally highs came in as well. We do have an extended market. Naturally, we would be looking for a market consolidation off these levels, but one of the characteristics that we've been seeing in the market, especially over the last month and a half, is that the sell-offs are very shallow and very short-lived before the market makes new advanced pushes. We certainly cannot rule out the idea that this market makes a straight line bolt all the way up toward the 121 to 122 area over the next month without giving any proper retracing profit-taking cycles for strategic entries. So at this juncture, we're watching how the price action will behave up here, but so far there's been nothing bearish in the price action. Next here, I want to take a look at the ISE U.S. Regional Banks Index, symbol JLO, and we continue to consolidate here above an important support line at this 2150 to 22 area. This again continues to look like it wants to edge higher, but it's struggling a little bit on making each move. There certainly is no momentum in the Regional Banks Index yet, unlike so many of the other sectors. At some juncture, if the whole market remains bullish, then the regional banks should make a breakout above the 123 highs I put in over the last month and make an attempt to go retest to 24.50, 25 on the upside, but really at this juncture we have not seen that technical break yet to give an indication that this sector is ready to go. Nonetheless, there's always the chance that this entire rally we've seen here is nothing but a retracement before we go see another double bottom retest down at the 2050 to 21 area on the downside. And while I think it's unlikely that the regional banks would do that while the whole market is rallying, but if for whatever reason the S&P 500 was given a catalyst to do a proper profit-taking cycle, that would be the circumstances in which we would see the regional banks do the same. Next here, I want to take a look at the ISE Index, which is the symbol SIN. This is an index of all the casino, tobacco, and distiller companies. We had a very nice breakout on Tuesday, which pushed this market higher, and subsequently up until Friday, it came out with even further bullish news that threw the Sindex all the way up toward its 121 to 123 focal point up above. At this juncture, we've got a Sindex that is retesting the highs of the year, and it's certainly very positive. At this juncture, we're going to be watching whether this acts as a significant overhead resistance on the first go-around. But if we see proper follow-through, there are a number of targets that you can measure out all the way up into the 127 and 130 areas on the upside. So long as there's good, healthy profit-taking cycles that are contained in selling to within a few days, find good support lines. There's Sindex, if it can bust above the 123 level to mark new highs for the year, it certainly has room to follow through to some further upside targets. Next here, I want to take a look at the ISE Home Builders Index, which is symbol RUF. Here we've seen the market continue to advance up towards the 9.25 and 9.5 focal point, and it's acted like a very significant overhead resistance. The market continues to consolidate there without having a catalyst to make that push. At this juncture, this could be a pattern that's similar to an ascending triangle. At this stage, there may continue to be accumulation here at these levels before the demand side takes over and makes a break above this 950 level, opening a move up to 10, 10.5 on the upside. Really at this stage, That's just a speculation. We want to see some sort of technical confirmation of that technical break, because so long as we are contained at this 9.25, 9.5, we can't rule out the trade range bound market, which would have it bounce all the way back down to the previous low and back up. Again, the only circumstance which I would see the home builders index make that kind of a correction would be if the S&P went through a more robust profit-taking cycle, and then we'd see a retest of those previous lows. But at this stage, if the S&P for whatever reason wants to keep going up to that 121 level on the upside, then that might be enough of a catalyst for these home builders to make a break here and make them push up to that 10.5 area on the upside. Next here, I want to take a look at the ISE Natural Gas Index, which is symbol FUM, and then natural gas stocks, in spite of the weakness in the underlying commodity, have actually been rebounding very, very well. We had that 100 to 102 target last week marked off as the target zone, but essentially this past week we had a significant break above it, which now at some stage may still consolidate back down to the 102 and 101 levels, but recognize that now the window is open for it to even make an attempted push at some stage over the next 2 to 3 weeks all the way back up to the 107, 109. It would obviously be nice to see that the underlying natural gas commodity would strengthen or stabilize to give further bullishness to the sector, but it appears the stocks have put in some sort of a bottom and are now definitely in an accumulation phase. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is the symbol UKX. We again continue to have consolidations and bullish breaks higher. That April-May high on that FTSE came in at that 580 to 585, and so long as the global markets as a whole follow suit, including the S&P 500, and all attempt to push to new levels in the market, if we see that, then the FTSE will continue to use these little pullbacks as an opportunity to keep thrusting higher toward that upside target. That up there would probably be a realistic place where we'll find some overhead resistance and some stalling price action, and to look for a profit-taking cycle, but that might still be a week or two away. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.